Every time prices rally for the last 10 years, for the last 30 years, the commercials band together, increase their short sales to satiate, satisfy all buying, and eventually wait for the price to come down after all the buying has been satisfied. The simplest solution would be to disallow that specific mechanism of being able to go short and strictly to depress and cap the price.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and with another exciting, I guess they're all exciting weeks in silver these days, but with the price really rallying over the past couple months, things getting a bit more volatile, bankers being arrested. It's a pleasure to have joining me today Ted Butler, who really has been writing about all these things that the Department of Justice is just figuring out now. So pleasure to have you on here today, Ted. How is everything going with you, my friend?
Can't complain. You're right, Chris. It has been exciting of late.
Yeah, well, especially since, again, you've been writing about this. It's unfortunate that the CFTC and Department of Justice didn't actually respond to your work years ago, but since you've been ahead of the curve on what's happening now, would love to get your take on where things stand and how you see it playing out going forward.
Yeah, be glad to. Obviously, the thoughts are coming fast and furious, as has the news. Anyway, it's good. It can't be considered bad in any way, except if you're J.P. Morgan or another manipulator of gold and silver prices. But the news is basically good in that both the Department of Justice and the CFTC seem to be waking up to the idea that something is amiss in the precious metals market, specifically the COMEX, where all the allegations of spoofing and short-term price manipulation have been based. It's one point I would make. This is, as I've contended for many years, decades even, the manipulation, if it exists on the COMEX. So it is, more than noteworthy that the Department of Justice and the CFTC agree on that. In other words, there's no charges of spoofing or manipulation in precious metals anyplace else in London or in China or Timbuktu. It's all the COMEX. While that's good and very validating and reaffirming something that that I and a lot of other people were keenly aware of. The problem is that the Justice Department and certainly the CFTC have not gone far enough. I mean, they're focusing, and I understand it. I think I understand it, that they're focusing on spoofing, which is easy to prove and very short-term in nature, as an alternative to admitting and charging the serious crime, the crime of price suppression and depression in gold and silver for many years, but certainly for the last 10 years. They want to avoid that. They have to avoid that, because if they were to come out, they being the Justice Department, and allege that J.P. Morgan, which has in fact been suppressing the price of silver for at least 10 years, were actually doing that, then J.P. Morgan in effect would be dead meat. They would at some point cease to exist, because they could not, J.P. Morgan could not handle the blowback, the repercussions, the punitive damages that they would be subject to if the Justice Department came out and said, hey, you guys have been depressing the price of silver and gold. And I think that's why the Justice Department stopped, or well short of that, just to get JP Morgan to stop doing what they've been doing, depressing the price, but not coming out and saying it.
Right. Yeah, which is baffling, and I mean, I guess it makes sense in its own right. I'm of the school of thought that if there's an organization that's committing a series of felonies to keep them half alive, I get it. There's the repercussions if you have one of the major banks go down. I would say, to me, that seems inevitable anyway. Yet you would think in the very least that there's enough out there that you could say, JP Morgan, you're not allowed to trade in the gold and silver markets. Would that be at least reasonable in some form?
Yeah, absolutely. In fact, that was the specific solution or suggestion that I made in a recent article. I mean, you don't even have to, I guess, JP Morgan is such an important part of precious metals trading, both physical and on the futures market, derivatives market, that I don't even know if you'd have to go so far as to say you got to get out of the business completely, even though I agree with you that should be the case. All the Justice Department or the CFTC has to do, it's short of that, is just order JP Morgan not to go short anymore. Disallow JP Morgan the ability to go short, okay, on the COMEX every time prices rally for the last 10 years, for the last 30 years. The commercials band together, increase their short sales to satiate, satisfy all buying, and eventually wait for the price to come down after all the buying has been satisfied. The simplest solution would be to disallow that specific mechanism of being able to go short and strictly to depress and cap the price. Look, it'd be one thing if there was a legitimate shorting. It's not. It's like they're shorting for the simple reason of containing and capping the price. That you can see in that there's hardly any, I don't think there's any, but I say hardly any, legitimate hedging going on. There's not mining companies that are going short to lock in production costs or lock in proceeds on the sale of their product, which is why the futures market exists, to allow that. But they're not doing it. The price has been so low that any mining company that locked in the price that we've had for the last 8 years or so would be locking in losses to a large extent, and they're not going to do that. So all the selling, all the short selling is not economically legitimate. There's no sound basis for it. The only reason it exists is to keep prices under pressure and disallow them from rising. And the proof is in the fact that there's only about 8 traders in silver that control more than the entire commercial short position in total. It's like it's crazy. It's so in your face manipulation that all they'd have to do, they don't have to put anybody out of business, just tell them you can't go short anymore because you abused that privilege, and therefore you're not allowed to do it anymore. And then we'll see what happens to the price.
Yeah, and certainly you've been commenting a lot about that in your columns, which, by the way, people can find at butlerresearch.com. I'm a proud subscriber, I think back to 2011, and darn grateful for everything you've shared there, which especially recently included talking about how these big 8 shorts have been racking up quite a a loss on their paper loss so far because they've been short the metals at, let's say, I guess, $15 silver, 1,300 gold. Maybe let me know if those numbers are close. But as the price has been going up, someone is losing on these positions. And I continue to wonder, I mean, you'd think you'd be getting a little nervous if you have this short, you've seen the price rise, and you have at the same time QE and interest rate cuts coming around the world. Love to hear what you're thinking these guys must be going through their minds at this point.
Well, yeah, your numbers are pretty accurate. I pegged the average price short sale for silver around 15 and a quarter or so, and maybe 13.50 on gold. And yeah, no, you're 100% correct for the I won't say that they've never been, these big shorts have never been in the hole, financial hole before, but they've never been in the financial hole that they're in right now. They have a much bigger open and unrealized loss. It's not a booked loss yet. It's not a closed out position. It's very much an open position, but still, it's easy. It's just simple math to figure out just how well or how poorly they're doing, and they're not doing well at all. In fact, they're the worst they've ever been as of today's close. This is what, Tuesday, the 23rd, I believe. As of today's close, I count the 7 big shorts because I contend that JP Morgan, which is obviously one of or the biggest of the 8 shorts, has so much physical metal that they've bought over the last 8 years that they can't get hurt by a price rise. They'll make a fortune if the price goes up, regardless of whatever their short position might be on the COMEX. It's much smaller than their physical long position. But the other 7 big shorts in gold and silver, and I combine them because I think they're probably mostly the same, they don't have the physical metal backing that JP Morgan does, so their losses are pure and simple. They're net losses. And right now, as of today's close, I'd peg them as being out, okay, in the hole by about $4.5 billion, so the most they've ever been out. You divide 7 into $4.5 billion, and these guys are out something like $650 million each on average. I know they got to be feeling the pinch somewhat. They certainly, according to all exchange rules, have had to meet every margin call that has come along. So they've met margin calls on the order of $4.5 billion since the price of gold and silver has gone up over the last few months to today. And they got to be aware of that. I mean, they may be in control. They may succeed in the end in driving prices down yet again, as they have for decades. But this is the most potential trouble that they've ever been in. And look, they stand a chance, okay, to panic and say no mas, that these losses, not all of them perhaps at the same time, but 1 or 2 or a number of them may decide to throw in the towel and move, instead of adding more short positions to control the price, may get the order from within their own organization that this has gone far enough, and we want you to close out this position, and we don't want to take any more risk in this area. And if they do that, if any of them do that, and it's a potential, it's a possibility, or maybe even a probability, all hell will break loose on the upside, okay, in terms of price, because these guys, these 7 or 8 guys, depending whether you include JP Morgan or not, okay, they've been solely responsible for the price being where it is. I say depressed in the case of silver. I don't know if there's anybody out there that thinks silver is way too high. There might be, but if you think silver is low, this is the reason it's low, is because these 7 or 8 trading firms have illegitimately overshorted and oversold the market to such an extent that it influences price. If they look to exit, then the whole game changes, and you have to ask if the people who were most responsible for the shorting and selling up until now for the last 35 years decide they're not going to be the shorters anymore, then who the heck is going to go short? Who in their right mind would come in and short silver here, short the price? I don't look, the fact that so few of them, 7 or 8, control the entire net commercial short position tells you there's nobody else willing to go short silver. So if they stop going short, then it creates a void in which the price will just, like in a vacuum, will just, just explode, okay, to wherever the price has to go in order to attract legitimate shorts and legitimate sellers, and not just manipulative paper sellers, commercial banks, okay, on the COMEX. It's look, either they're going to win, they're going to ride this out, or they're going to fail. I don't think I have to tell you what I'm rooting for. Okay, it's long overdue that these guys, get what they really deserve and get it good.
Yeah, it's such a fascinating dynamic, because when you combine what you just said with the first part about the case with the Department of Justice, it sets up a situation where either, the scheme works because every time they've wanted to short it in the past decade, they've been able to drive it lower and buy it back cheaper. And essentially either the price, now whether the average banker sees silver as undervalued fundamentally, as you or I do, is something I wonder. But if they do, and they realize they're shorting something well below any sort of realistic fair value, you have this prisoner's dilemma where if you can't short it and make it lower, essentially you have every incentive to run for the exits as soon as possible. Yet to short it and drive it lower, you have to be willing to do that in the face of the DOJ investigation. So it really leaves them in a bit of a tricky position where, outside of, again, spitting in the face of the investigation, it almost has to go higher at this point.
Well, I mean, that's, I happen to agree. The question is, the timing of the whole thing, and that's why the recent run-up and the extremely large financial losses that has put on these primary short sellers is like raises the issue to the here and now. How much can they take? One thing that you don't see, you don't see anybody coming out and legitimately defending what these guys have done. It's like it's the greatest conspiracy of silence that I don't think anybody has ever experienced anything like this. It's like it's a simple thing. 7 or 8 cars are short, enough to keep the price, have kept the price down. Now they're hurting. Okay, these are the numbers I'm throwing out. If somebody wants to throw out different numbers, I'm all ears. And this is the central issue. It couldn't be more basic. And yet, it's like I'm speaking in a foreign language when I'm speaking to the Department of Justice or the CFTC. They just don't appear to hear or want to comment on it. But it's like based on everything I look at is based upon the CFTC's own data that shows this concentration position. You can figure out, once you figure the concentrated but short position, you figure out how many contracts that is, which is not very difficult, and then you just multiply it by the price change. It's like you come up with these open losses. It's like there's no argument there. So where are we going with this? Where's the end point? And the end point is that either they're going to drive it down again, which doesn't seem likely at this point, or they're going to panic and rush to cover at some point. And as and when they do rush to panic, we're going to see it in the price, and it's going to be there black and white. I don't know how it gets resolved any other way. Somebody's going to have to report these losses. We're approaching the quarter end, and all this stuff has basically transpired this quarter in the last few months. So, maybe some kind of reckoning is soon. But the minute these big shorts, can't come up with, all the money in terms of margin calls and putting up additional margin if they go short more contracts, the minute that stops, the game is over. And I sense that we're closer to that than we've ever been before.
There's part 1 of the interview with Ted Butler. Part 2 is just as wild, if not better. So check back tomorrow, and that one will be posted.